0% APR credit cards can be an insane hack where you basically get free money from your credit card spending, but there are traps and nuances with the strategy that you need to pay attention to if you want it to work. In this video, let's break it all down, and if you end up finding value in the content, please do consider liking the video and subscribing to the channel. First, let's outline the basic form of this strategy using the Chase Freedom Flex as an example. We're not getting into the details of this card in this video, except for the sign-up bonus, which is for $200 cashback, or more appropriately, 20,000 Chase Ultimate Reward points after spending $500 in the first 3 months of account opening, as well as 5% cashback or 5x UR points on gas and groceries up to your first $12,000 of spending in the first year. There's a second part of the sign-up bonus, which is for 0% intro APR on purchases and balance transfers for the first 15 months. This means that whatever balance that you carry on the card in the 15 months will not accrue any interest. So, say you spend $1,000 on the card in the first month and you secure that bonus. Instead of paying off the $1,000, which you typically would do to avoid a devastating 20 to 30% interest rate, you would instead put that $1,000 in a high-yield savings account. In the current high interest rate environment that we're in, where the Fed has raised the federal funds rate by a whopping 10 times since 2022, as well as by 5.25% in aggregate, these high-yield savings accounts are typically yielding 4 to 5% annually. $1,000 returning 5% annually over 15 months will grow by around $63. This $63 is a realization of arbitrage or riskless profit. Virtually all high-yield savings accounts are FDIC insured up to $250,000, and while the returns on these accounts may be lower in the future, you will not, crucially, lose money on these accounts. Now, such a strategy won't earn you game-changing money by any means, but given the little amount of effort needed to execute upon it, as well as a guarantee that you will profit, heck, sign me up. Now, let's get into 3 main ways as to how you might be negatively impacted from using 0% APR credit cards, starting with number 1, not paying the balance off in full at the end of the 0% APR period. This is because any interest that accrues on the card will eat into the free money that you had earned faster than you know it. Carrying a balance when interest is accruing is one of the greatest credit card mistakes that a user can make. And frankly, if you're willing to do that, you're better off just not using credit cards. So to ensure that the balance gets paid off in full at the end of the 0% APR period, I'd recommend simply setting up an automatic payment on that specific date and just ensuring that the bank account that will be paying that amount is sufficiently funded. Number 2, and hopefully this goes without saying, you want to consistently make minimum monthly payments on the card even during the 0% APR period. This is because if you don't, you will be subjected to a late fee, have your credit score negatively impacted given that payment history is a significant factor on the credit score, as well as in some cases, the bank may terminate your 0% APR period and impose a penalty APR. Ouch. Again, I recommend to set automatic payments for that minimum monthly amount. But if you happen to forget to make it and you realize a day or 2 later, certainly try to call the bank and ask if they can waive the late fee. Typically, for customers with historically great payment history, the bank will be willing to waive that late fee. Number 3, even if you never miss a minimum monthly payment, your credit score may still be negatively impacted from a higher credit utilization, which is another significant factor on the credit score. So, say your Chase Freedom Flex has a credit limit of $5,000. So if you carry a balance of $1,000, your credit utilization will be 1,000 divided by 5,000 equals 20%. While this isn't terribly high, it can certainly ding your credit score. From my experience, it's been by about 10 to 20 points, but it could certainly be more. A way around this is by performing the strategy using a business credit card that also has a 0% intro APR offer. This is because business credit cards, as well as their balances, typically don't show up on your personal credit report. Fortunately, for my folks who don't have an actual LLC, the barriers to entry for getting a business credit card really aren't that insurmountable. Several side hustles and even a plan to start one may allow you the opportunity to get approved for a business credit card. And with that, I hope you've gotten a better understanding of how to strategically use 0% APR cards to put a little bit more cash back in your wallet. It's just one of the several awesome credit card hacks that you should be taking advantage of. That's it for this one. For now, peace.